Hey, good afternoon. This is Neil Simple Futures, and it is Thursday, the 19th of October, which means that tomorrow is the options expiration for October. So we're going to see how that has, what the effect of that is tomorrow. Today, the effect was Powell. And my goodness, things were much better until almost exactly when he started talking here at about 11 o'clock Central / noon Eastern. And that was the high of the move. Nothing but down from there. So what this did was actually trade through the top of the first hour initial balance, then through the bottom, and ended on the low. That day type is one that's called a neutral extreme, bearish in this case, since it ended on the low. And what generally that means is you can anticipate some additional follow through in that direction. That being the case, let's see, what's the close today? About 42.95, 45 or so on the expected move for tomorrow. That put, I'd look at target. 42.70 on the short side tomorrow, and the ES, and 43.37, 35.37, but 43.37 as the bull target for tomorrow, and those are going to be against the ending price here at 42.95. For the over-under line in the sand. I was looking for a little bit better trading, kind of more, I guess, bullish, really, trading environment today. But, Powell just clearly wrecked that at 11 o'clock Central today with the high of the move, and it was just, it was all downside from there. To see things bounce, you're just going to have to keep an eye on the dollar or the bonds, your choice. But when the dollar turns down, the bonds are going to turn up. So either look at the bonds. When they turn up, then, the NASDAQ can turn up. And when it turns, it can lift a lot of ships. So when the bonds turn, it's going to be on a downtick in the dollar. The good news is there is a bearish formation in the dollar index today on the daily chart. It's only a setup, though. It needs a trigger, and the trigger is actually a breach of the range low for today and yesterday. A breach on a sell stop of the dollar index breaching the range low of yesterday and today is a trigger of the formation that's in place right now. It's called an equal and opposite. That if that's the case, the bonds will turn up, and when that's the case, the NASDAQ's going to turn up, and it'll allow a lot of this stuff to kind of come out of the hole. This trade today, down 1% in the S&Ps, 46 points, is a full retracement back to the non-farm payroll news price of Friday the 6th. So when we got that last payroll report, remember that big up day, that Friday? This is exactly the price where, 93.5, I guess, is really close enough, right? This is exactly the price where the S&Ps were that morning. Which is, we call it, a return to, the newsprint, kind of sync with where the auction was prior to that new information coming to be known. So we'll see how this level holds. It's one that could, be in a full retracement back to that news price, certainly could. Any further down, though, it's going to trade, I think it'll trade 43.70 next, or 42.70, 42.70 next on the downside. But a bounce off this news price back to the upside, we'll be looking for 43.37 tomorrow. Okay, and the next price above that we will have in mind will be 57. That was my over-under for today, actually. It's a big HVN balance print at 56.57. Unfortunately, it served as an over-under, more of an over than an under today. But anyway, that would be the next price up for Target on the top side. Hope it helps. Let's get through this OPEX tomorrow and come out the other side. We'll look forward to being with you again at the next update. Till then, good trading. Good night.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me